Hi everyone, and thank you for tuning in. In this video, I'm going to talk about the Dow Jones bear market and two stocks I'm considering buying because of the falling market. Now, the Dow Jones consists of 30 major stocks in the US, and a bear market means that that average is down more than 20%. So the coronavirus pandemic has unleashed this ugly bout of inflation, and the central banks around the world are trying to bring inflation down, and so they're increasing interest rates and conducting restrictive monetary policy. And typically when that happens, that brings stock prices down, and that's partly to blame for this bear market that we're experiencing. But if you want to look on the bright side, that is creating some opportunities to buy some stocks at bargain prices. And I'm going to talk about two of them right now. The first one is Nike. Nike has a powerful brand that's taking advantage of consumer relationships to pass over wholesalers. So in this last few years, I think since 2019, Nike's been reducing the amount of wholesale partners it deals with, right? So it's trying to cut them out of the equation and just go direct to consumer. Nike's been able to do this because of the rapid response to its app, the direct to consumer app, e-commerce app. It's more popular than Nike expected it to be, and Nike's able to generate sales directly through the app, and that way it doesn't need to sell its products to wholesalers at lower prices. It can sell directly to customers, and typically that's going to lead to higher profit margins on a product sale. So that tailwind will likely continue for the next several years as it continues attracting customers to its app, but it's also allowing Nike to open up more of its retail stores and again go direct to consumer, cutting out the middleman, increasing profit margins. And we all know how popular Nike's brand is and how enthusiastic athletes are about Nike's apparel, shoes, and its whole suite of products. And so this could be a tailwind, and that's one reason that has me attracted to Nike stock and why I'm watching it. And if it keeps falling, I have it on my list that if it keeps falling, I might purchase this stock. The stock actually fell further. Today it's down to, as of this recording on September 30th, it's down 12% because it announced first quarter 2023 earnings yesterday, and there was some key negatives in that report, namely that inventories were up significantly from the same time last year. Last year, Nike was complaining that it didn't have enough products to meet customer demand, that it was short in certain areas. It had multiple out of stock categories, and it's having the opposite problem right now. Now it has too much inventory because it ordered ahead. It got holiday inventory in early. It ordered more than it needed, and so now it has the problem that it has too much inventory. And management said that it's going to need to offer more discounts, more incentives to sell that inventory, and so that's going to mean a gross profit margin for the fiscal year 2023 that's going to decline by several hundred basis points. So this was a huge negative, going a sharp reversal from having not enough inventory to having way too much inventory. And this is a problem for several other retailers. Two of the other companies that I follow are Walmart and Target, and those two have also indicated that they have way too much inventory, and they've already announced major promotions driving down prices to try and get rid of especially apparel, clothing, to try and sell those items out and free up some space for the other items that consumers might want more so now than they were 6 months ago. And so Nike's going to have to compete with those other retailers that are also discounting prices. So this is not good news for investors with all of these retailers, billions and billions of dollars of inventory going on sale, driving down profit margins. This is one reason why I'm not buying this stock just yet. and I'm waiting for a further decline in the price because of the extra uncertainty in the near term with these elevated inventory levels. Still, even that considering Nike stock is selling at a bargain valuation. It's, if you could see this chart here, I know it's a little bit small, but it's trading at a price to earnings ratio of 22.3. It's the lowest, it's the cheapest it has traded for according to this metric going back about a decade, going back before 2014 to 2013 and 12. So it's already at a bargain valuation. If prices are to come down further, another 10 or 15%, that could have me buying the stock. If that does happen over the next week or two, I may buy this stock. Next stock that I have on my list that I might buy in the next couple of weeks if it falls further is Home Depot. It's a best-in-class business in the $900 billion and growing home improvement industry. It's the best, it's the top of the line performer in this industry. It has excellent earnings per share growth at a compounded annual rate of 20% in the last decade. That's incredible for a brick and mortar retailer. Maybe the best I've seen in the group of companies I follow. And this is not all due, of course, we're all aware that Home Depot thrived at the pandemic's onset. I mean, sales and profits surged, exploded. But this compounded annual earnings growth in the last decade was not all due to the surge from the pandemic. They've consistently performed at a high level over the entire decade. So it's not like a one-off, like just the special circumstances are what caused the performance to outperform in the last 2 years. No, that's not the case. They've been excellent for the last decade. And they've proven that they could defend their business against Amazon. And that's most likely due to the type of products it sells. Big and bulky items like Home Depot sells it's difficult to ship at a low cost. It sells, $20 pieces of plywood that's ginormous. It's going to cost Amazon more to ship that item than the cost of the item. Furthermore, that's not an item you can deliver with one person. You need two people to carry that massive piece of plywood to someone's house, and you're not going to be able to do that with just one person. And that's typically how Amazon carries out its deliveries, is in a one-person van or truck, or it contracts out to UPS or something like that. So it's not the majority of items that Home Depot sells, well, not, I don't want to say majority, but the bulk of the items that it sells are going to be difficult to ship, and that's going to protect it against Amazon. It's already shown that it has protected it against Amazon. Earnings growth were 20% compounded annually for the last decade. Revenue growth also robust at 7 to 8% in the last decade. So they've been able to maintain sales growth, profit growth, despite the fact that Amazon has crushed so many other brick and mortar retailers. Home Depot was left relatively unscathed in that decade. Before I finish, I wanted to also highlight that Home Depot's price to earnings ratio is at 17.24, also near the cheapest in the last decade. If you look back here at the chart, 17.24 here, only one moment you've been able to buy it at a lower price. So just like Nike before it, Home Depot is selling at a bargain valuation relatively going back to the last decade, and that's what's attracting me to put this stock on my list and perhaps buy it in the next week or two if the price crash continues because of the Dow Jones bear market. All right, so thank you for watching. Those are my two stocks to buy in this Dow Jones bear market, the two stocks that I'm considering buying, and I'll keep you updated. I'll let you all know if I do actually end up buying these two stocks. Thanks for watching, and I'll see you next time. I want to thank the Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for all investors of all skill sets and risk levels. So I'm proud to partner with the Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by more than 3 times. Go to fool.com/Parkev to get your 10 stock picks now.